Markets in turmoil just about everywhere. Russia invades the Ukraine, oil prices spiking to the highest level since 2008. It seems like a terrible investing environment, but it's important to keep perspective in order to manage your money better. That's today on 3 Minutes of Markets and Money. It certainly seems that with all the headlines out there that, well, why on earth would I want to be invested into the financial markets now? I should just get out entirely. This is a common email that I've been getting lately, but it's important as investors that we control our emotions when we're investing in order to keep from making longer term mistakes. Importantly, let's take a look at markets where we are currently. It certainly seems with all these headlines that are out there, and the markets are certainly down, that with markets down 10% right now, it's been just an absolutely terrible start to 2022. And look, it has. But this has been about a 10% correction so far in the markets. Markets will be down a little bit more this morning, but it's been about 10% from the recent peak. But the problem as investors is that we're focusing on the high water mark for the markets. This is called anchoring. We've picked a point and we're measuring everything off of the highest level that the market's been at in history. The problem here, though, is that 10% correction, which, by the way, is down 10% for the year. That's very normal in terms of any correction for any given year. It certainly seems terrible after a year that we had last year with virtually no volatility. But again, we need to keep that correction in perspective with historical corrections, which this is actually quite common in any given year of the financial markets. But more importantly, let's just extend our view back here just a little bit. Instead of looking at the most recent highs in the market, let's go back to looking at October of last year, where the markets were hitting an all-time high at that juncture. Now, all of a sudden, if we take a look at those all-time highs versus where we are now, the market is really only down about 3-4% from that level. Again, it depends on where we mark our starting and ending points as to really where we are within our overall portfolio. Now, look, it's a function of how we're trained in markets. We look at every year in terms of January to December in terms of measuring performance for each given year. That's the way we're taught. That's the way it's revealed on the media. My point, though, is to keep in perspective that really the market hasn't gone anywhere since October of last year. It's been a big fat goose egg now in terms of returns for the last 6 months. But again, we also need to keep this level of performance, or really I should say non-performance, in perspective as well. If we extend our view back a couple of years here as well and take a look at the markets overall, again, perspective becomes extremely important. Back in February of 2020, we were hitting all-time highs. This was the highest level of the market at the time. We were talking about high valuations at that point as well. Markets were melting up at this point. And of course, then we had the pandemic-driven shutdown after that peak, right? And so when we go back to looking at that point, we were talking about markets at all-time highs. We're making money hand over fist. Then the market rallies 120% from these lows and has had a terrific run of very low volatility. Now we're having this correction from this peak here. This down 10% from the peak is barely a blip in terms of this long-term run that we've had in the markets over the last 2 years. Again, perspective is very important in terms of keeping our emotions in check. Yes, portfolios have come down in value at this point, but again, relative to where we've been over the course of the last 18 to 24 months, that is basically just a small correction within this current uptrend in the markets. Now, could things get worse? Could we have a bigger decline in markets? Yes, of course. Am I saying that you shouldn't be managing risk in your portfolio? Absolutely not. But my point here is to keep things in perspective that yes, we're having a decline, but this isn't the type of environment where you just throw out the baby with the bathwater. Instead, focus on assets that are working, things that are giving you some protection in the markets as well. Also, reduce some risk. If you don't like the volatility of the markets currently, it doesn't hurt to sell down some assets, but getting out of the market entirely is going to be problematic because, again, once you get out of the market entirely, which a lot of people did back in March of 2020, they didn't get back into the markets and missed the majority of the run. So it's important to keep perspective on where we are currently currently. Don't let emotions drive your investment decisions, but use your investment discipline and your strategies accordingly to manage your overall risk. Is there risk in the markets currently? Absolutely. But it doesn't mean that there's not a way to make money in this market. And there's also doesn't mean that you need to be entirely out of the market either, which makes it incredibly difficult to get back in. That's 3 minutes on markets and money. I'll see you tomorrow.